unless this market turns around today and we have a really strong rally that will get us back above where we were at the close of the year in December, we're going to have a negative first 5 days. So if we now have taken out 2 of the 3 legs of the trifecta, depending on how today ends up. So here's what you need to know before the bell this morning. So goes the Santa Claus rally, so goes the first 5 days of January, so goes the month, so goes the year. So we talk about the January trifecta. The January trifecta is a positive Santa Claus rally, followed by the first 5 days of January being positive, followed by the month of January being positive. That has a very high correlation historically to a positive return year. However, there is also a fairly decent correlation between negative months of January. January is negative about 39% of the time historically. So it's not a zero possibility that January will be negative. It's about a 40% probability. But a negative January tends to have, on average, a negative year. Now, not every year this works out, right? Sometimes we've had a negative year, a negative January, and had a positive year. So again, it doesn't, don't take these things as, writ that this is absolutely going to happen because we don't know. However, Santa Claus rally, that failed. We had the last 5 days of December were good. The first 2 days of January wiped out all of the gains from the last 5 days of December. So the Santa Claus rally failed. Now, unless we have an exceptionally strong rally, and unfortunately right now, Dow futures, I'm looking at the screen, are down about 153 points this morning on the Dow. S&P down as well. NASDAQ is down. So unless this market turns around today and we have a really strong rally that will get us back above where we were at the close of the year in December, we're going to have a negative first 5 days. So if we now have taken out 2 of the 3 legs of the trifecta, depending on how today ends up, but that's the problem we're facing. Markets broke below the 20-day moving average on Friday, so we're going to be wrestling with that this morning. We actually broke above the 20-day moving average on Thursday, tested it on Friday, failed, and the market basically kind of struggled through the end of the day. Kind of ended just barely, it was flat on Friday, but just barely up off of its opening in the morning. We're still on this sell signal from the MACD basis, which is also at a fairly high level. We are working off that relative strength index. Again, we were pretty overbought on a short-term basis. We are working off that overbought condition, but we still have some more work to do on that as well. We haven't got back to oversold yet either. So there is certainly, at this point, not a lot of strength in the market so far this year. Again, we're going to get through this and you're going to get a rally. In fact, we're getting, after basically 5 days of selling off, you're going to get a point where you get a little bit of a bounce. However, we had 9 weeks straight of a positive advance. So again, we're just working off that excess that we had from those last 9 weeks of November and December last year. So again, we had a very, very strong year-end rally, 15%. So giving back up a little bit of that's not surprising at all. But we've just got to work through this process. So again, this correction so far isn't anything to really worry about. It was something that's very needed. It's healthy. We need a bit of a pullback here. The question becomes, how far do we pull back? Do we get a correction back towards the 50-day moving average? That's certainly possible. That right now that's around 45.30 on the S&P 500. So again, it's not terribly far away. We closed at 46.79 on Friday. So again, not tremendously far away. We could work towards that through the month. But again, we've got to get this market back to more oversold conditions, work off this kind of elevated MACD as well. So just these kind of technical indicators still suggest markets are overbought. Now, we are starting to reverse some of the bullish sentiment. That's also good news. Investors had gotten extremely bullish back in November and December. So we're starting to reverse some of that kind of fear, that greed in the markets. We're starting to see some of that come off. The technical indicators are starting to show signs of deterioration. That does suggest that we still have some more work to do, but we are working through that process. So again, you're going to get a better opportunity to put some capital to work here. Just be a little bit patient. Let's see how this kind of works out through the week. I would expect we're going to get a little bit of a bounce this week. Again, just after the kind of the sell-off last week, just you're going to get a little bit of buying coming in here. The question is are we able to rally back up to the highs, or do we fail and then turn lower again? Those are going to be the things to pay attention to. But that's what you need to know before the bell this morning. January, not starting out so well. Kind of like a door on an airplane. Just teasing. We segue this morning. It's going to be that kind of a week, I'm just telling you, folks.